Hey everyone. Before we get into today's show, I want to give a quick shout out to our sponsors, Coinbase Prime and Ledger. Love these companies, genuinely proud to call them sponsors of the show. You're going to be hearing all about them later from me, but now, on with the program. All right, everyone, welcome back to another weekly roundup edition of On the Margin. I'm joined, as always, by my co-host, Mr. Mark Yusko. What's going on, Mark?
Oh, this is a great Friday. I am excited to be here, Michael, and let's kick it off.
I know. Yeah, let's just get into it. I know we're going to be talking about this Bitcoin ETF, the futures-based ETF, later, but we got a lot of interesting charts to show you beforehand. So this is not a chart, but this got circulated on Twitter, and I just had to throw this on here as the first thing that we talked about. So this is Goldman's analyst coverage of Enron 3 weeks before it collapsed. So if you look at the date there up on the top left, this was in October 9th. I think by December 2nd, so about 3 weeks later, the stock went from about $38 to less than $1. And then it filed for, in November 2nd rather, and then in December it filed for bankruptcy. And the title of this analyst coverage is Still the Best of the Best. And the reason I love this is, I've talked about this on the show before, but my favorite documentary of all time is this Alex Gibney documentary, Smartest Guys in the Room, which is the coverage of Enron, which is just awesome if you haven't seen it. But Mark, you probably were paying attention to this live. So what's your kind of take on this?
Look, Michael, we still have the original PPM from the partnership. These guys came to our office in Chapel Hill and pitched, the smartest idea in the room, and we walked out going, "Don't get it." Watch this thing take off. We're invested in a number of hedge funds who were short early, which is the euphemism for wrong, and caused some pain. And then this happened, and we did a little happy dance, not a bit. I don't root against anybody. I don't like fraud. I don't like hype. I don't like crazy prices of things that make no sense, which we'll talk about later. So it's interesting. Now, the best thing that did come out of this, there's always a silver lining, was, this thing explodes. And there was a particular trader inside this space who then went on to form a hedge fund and was one of the most successful hedge funds of all time. John Arnold, probably one of the 5 smartest people I have ever met. I mean, he was one of the smartest people in the room. Now, he wasn't part of the cabal. He was just a trader. But the guy put up triple-digit, like multi-100% returns for a number of years, and self-made multi-billionaire, and has been a client of ours for a long time. And he's just awesome. So there were some good things that came out of the bad guys getting put in jail. Yeah.
One of my one of my two takeaways, I guess, from looking back at Enron, which is, you kind of think of Enron synonymous with corporate fraud, right? And if you go back, I think in time, right, like it was one of the 10 largest companies, in the U.S. at that time. And the total market cap of Enron, you'd probably know better than me, was somewhere around like $90 billion.
Yeah, exactly.
And when you think back to that, people are like the scale of the fraud and like the collapse was just enormous. And now you're looking back on $90 billion. Doesn't even
that's when 90 billion was right? A lot of money, right? I mean,
right
now, I make the joke all the time. The first asset manager I worked for back in the late 80s, early 90s, we had $1 billion. Back when and there were 5 of us, right? Back when $1 billion was a lot of money, and it was the largest spin out of a university. It was 2 university professors, and the first quant shop, and I mean, it was a big deal. But now you say $1 billion, and you're like, whatever. You say $1 trillion, and people still don't forget. I mean, it's amazing. But this was big on so many levels. I mean, one, it was iconic. Right? Everybody thought they were the smartest guys in the room. Everybody thought this was so great, and it was kind of similar to a current story where there's this company that everyone thinks is so amazing and is doing everything right, and everyone else doesn't know how to do it. Well, it turns out the other people that were doing the business the right way are still around, and this one is gone. So whether that happens with this other one, I don't know. But I think just because everybody believes something is real doesn't make it real. Just because everybody believes something is good doesn't make it good. Just because people believe it's smart doesn't make it smart. And the problem is, as you get rich, like as you make profits, you lose your ability to discern truth, and you just believe. And I think that's where we are today in the world and in the markets. It's people have lost their ability to question. They've lost their ability to think critically or think at all, right? So, hey, I'm getting rich. And I think you and I have talked about this. One of my favorite managers, Bill Duhamel at Route One, has this paper sign in his office. And it says, with every investment, we get richer or wiser, never both. Yeah. And I think that this is a perfect example of that. People got richer, but then they got a little stupid, and then they lost a lot of money.
Yeah. Well, I'm not 100% sure of what modern day company you might be referring to, but I might have a guess, and it might lead into this next slide.
You might have a slide on it, or maybe.
I might have a slide. And let me do my little lead in
here.
Oh, so we're going to talk about
that is amazing.
Tesla here. Yeah. But in this documentary, Smartest Guys in the Room, there's a woman named Bethany McLean. And I don't know if you or listeners are familiar with Bethany, but
I love Bethany. Bethany wrote a story about me a long time ago. I have actually been to her porch in Chicago picking up John Hempton, who is a good friend of hers who stayed at her house. Bethany is the best. I mean, she is the best. And that book that she's the best. She just wrote a new book.
So I'm just my baseline assumption is just going to be that you know everyone that I talk about now. That's going to be the baseline now. But she was a journalist at Fortune at the time. She helped break this story. She worked with a lot of short sellers who helped expose Enron. And she wrote this article back then, like, is Enron overvalued? But she since has kind of made a career out of covering like financial misdeeds, right? Yeah. She kind of wrote about Aubrey McClendon, and she's got this new book on Saudi Arabia and energy and all that kind of stuff. But she kind of came up with this idea, and she talked about it in this documentary that I really liked, which is the line between a fraud and a visionary is extremely thin. And she actually mentioned, talking about Jeff Skilling, the CEO at Enron, was she actually believes in covering this, that there was a point where they might have been able to make it, right? If certain things hadn't happened with the stock price, that they actually could have gotten away with a lot of it. And that kind of brings me to Tesla, right? Because, with a guy like Elon Musk, he's such a personality. My personal theory on this guy is that he's just completely narrowed his he's like band of possible futures into two outcomes, right? Yeah. Where it's just a complete visionary genius and he flies off in a rocket ship and dies on Mars, which apparently he wants to do, or he goes down as a complete fraud, right? And like when you look at these charts, I have no personal opinion on Elon Musk, but when you look at these charts, it's pretty stunning, right? So Tesla's market cap, for those who are listening, just audio here, we're looking at a chart of Tesla's market cap compared to the rest of automakers in the U.S. And their sales, and you can actually see that Tesla's market cap is the same as like Toyota, Volkswagen, Daimler, GM, BMW, Honda, Stellantis, Ford, SAIC Motor, all these companies combined. But their sales is, I can't do this math off the top of my head, but like 1/20th. So yeah, 5%. I know you have strong opinions. Yeah, I know you have strong opinions.
No, I have beyond strong opinions. And look, I think, I don't think this is a fraud in the way Enron was a fraud. I do believe there has been fraud committed multiple times. I think he's made fraudulent statements. I think in a normal world where corruption wasn't normalized through lobbying, he'd have been censored, removed, maybe even jailed for some of the stuff that he's done. All that said, look, he did achieve something that is pretty amazing, right? He brought back 100-year-old technology that had basically been shelved by Henry Ford and all the other people on the left-hand side of this chart. That, we talked about this, I think last week even, that maybe 2 weeks ago. But look, the largest car company in America in 1903 was the American Electric Car Company, right? Electric cars are not new. They were going to be the thing. And Henry Ford and John D. Rockefeller had a different idea. They wanted to sell Well, they didn't even want to sell. They just actually didn't want to flush the gasoline down the river so the river would catch on fire when he was making kerosene to light lamps. And he told Henry, hey, if you put this in your car, it'll burn and we can do internal combustion. And so they basically, put American Electric Vehicle out of business. And that technology has been around for a long time, but it wasn't popularized. And one thing that no one can debate about Elon is he is charismatic and he is visionary and he has been involved in a lot of, I say involved, I didn't say he created, he's been involved with a lot of revolutionary technology. He didn't start SpaceX, but everyone thinks it's his company. He doesn't run SpaceX, but everyone thinks it's his company. But he talks about it really well, and he certainly invested in it, and he's done incredibly well for himself. He's done incredibly well for shareholders to this point. But this is an example of one of the many things that's wrong with the world. And I actually tweeted about this late last night, that don't be fooled by money illusion. This is money illusion. The nominal price of assets is rising because the value that we denominate those assets in is being destroyed. The currency. I mean, we have turned the US dollar into a shit token or a shit coin. And it is literally toilet paper. And the more the nominal prices rise, the more people think it's good, and the more the Ponzi has to go on. And the only way to keep the Ponzi going is to print more money. And by printing more money, you increase the nominal value. And again, we've seen this movie over and over and over. And we know how it ends. You just don't know when it ends.
Yeah. My thing about Elon is, I like I said, just disclaimer, I don't really have any strong opinions about the guy. I will just say, when you compare Enron to something like Tesla, Enron, they were like calling up the guys in California being like, can you shut down the power grid to manipulate the price of energy back then? Yeah. With Tesla, I mean, the product is great. Right? Like the Tesla cars are good. And even when you look at space, I actually think SpaceX is a much more impressive company and venture than Tesla. I don't have the stats off the top of my head, but it's like, the cost to bring, a kilogram or something into space, they took it down like 75% or some incredible statistics. So, in some sense, the product works. And I'd be curious to get your perspective on this, Mark. It's kind of this theory I have, and, you've led people and built funds and companies and stuff, but as a leader or a CEO, you kind of have to sometimes stretch the truth a little bit. Not lie, but things don't go linearly, right? Yeah, like sometimes things don't go great, right? And you can't exactly say to your team like, "Hey guys, it's looking pretty shit right now." You kind of have to say, "Hey, no, it's all right. Like it's all going to be fine. Like everyone keep working towards the goal, etc." And the scale that you have to embellish is kind of proportionate to the size of the goal that you're trying to achieve. So one of these other theories that I have for Elon is he set some big audacious goals for himself, right? And whether or not you believe he's really trying to make humanity a spacefaring species, etc. I mean, even just building a huge electric car company and a space company, those are big, outrageous goals to set out on. So
100%. 100%. But we could talk too long on this, but there's all kinds of things that bother me about this story, right? Which is electric vehicles do actually make some sense in the sense that why does every car have a power plant on it? It does actually make sense, just like distributed networks make sense, to have a distributed network of power generation, power storage on chassis, and drive around that way. So that actually does make sense. But this idea that it's, green versus not green, and hydrocarbons are not green, and this is green, it's kind of comical, right? I mean, how is the electricity being produced? Much of it using hydrocarbons, actually. How are the materials that go into the batteries produced? Much of it using hydrocarbons, and some of it doing way worse damage to the environment than the actual carbon emitted by internal combustion engine. So, and people are going to their heads are going to be exploding right now. So, that's not true. I'm like, well, some of it's just fact, right? And I'm not saying it's equivalent. And The other problem that I really haven't, it's the chart on the right. Even if everyone wanted an EV, which is not true, but even if everybody wanted one, it can't happen for 30 years. Like our fund, we have a long short fund, and it's up a lot this year. Why? Because we overweighted energy last year when everyone was basically said hydrocarbons are done, ESG has wiped them out, everyone's going to divest, these stocks are worthless. We're like, I don't think they're worthless, and I think oil prices are actually going to recover when things start to return to normal. And oil prices now are back to $80. People were saying they were going to zero. Remember, I mean, literally a year ago, people said oil was going to zero. Anytime people say a commodity price is going to zero, you should buy a lot of it. And oil is going to be with us for a very long time. And that doesn't mean there won't be a continued migration. But some of those companies on the left are making electric vehicles. And everyone says, oh, but they're not as good. I don't know. I've been in a couple of them, and they're just the same. I mean, electric drivetrain is not unique, right? The drivetrain process of an electric vehicle is not unique. Getting enough batteries is a challenge, and Tesla, I think, does have a lead there. But they don't have an insurmountable lead, and they actually don't own the technology. So, I don't know. Look, this is an anomaly. You can't have a company that I've stated publicly will never make money. Tesla will never make a profit, a real profit. Like if you take out the credits that they sell, which they paid for through lobbying to get this exemption, they've lost. They've torched. I call it, an internal. It's not a internal combustion engine. It's a cash incineration engine, and a CIE. And these guys will never make money. They promised us $35,000 cars. Now the lowest price you can get is $42,000, and that barely runs. I think you have to get the steering wheel for extra. So promises are great. People love a story. The Greatest Showman, the whole thing. I do actually refer to him. I think I told you this a couple months ago. That I refer to him as the P.T. Barnum of our age. But then I saw The Greatest Showman. I'm like, I got to stop saying that because I actually like P.T. Barnum. So.
Yeah, I mean, there's so much to talk about with this, but I do want to make sure that we get to some of these other stories. And this chart, this was a last minute addition. Lynn Alden a little while ago told me to look into Lightning. I think I was thinking about Lightning in totally the wrong way, because my thought process behind Lightning was, why would I ever want to spend my Bitcoin, right? I have been accumulating Bitcoin for a while. I want to hold it. I don't really care about something that enables me to spend Bitcoin. But just look at the adoption on this chart. And like two things to point out here, which is one, a lot of the L2 adoption that's going on, for other kind of layer ones like, outside of Bitcoin, they're all kind of releasing a token, right? And like that's like kind of drawing people into their network for the wrong, you could say the wrong reasons, right? But for Lightning, there's no additional incentive. People literally just want to use it. And look at this chart.
You don't have to spend your Bitcoin. That's the beauty of Lightning. And I just took a sip of my coffee. This coffee is courtesy of Lightning. So anyone who sent me a tip in the last week on Bitcoin, on Twitter, thank you, because this coffee is on them, and that came through the Lightning Network and through the Strike app. And look, those people took fiat and sent me fiat, which I then spent on this cup of coffee. It went over the Lightning, over the Lightning Network and over the Bitcoin rails, but we didn't actually spend Bitcoin. There was a simultaneous purchase and sale of Bitcoin, which allowed the transaction to go through. That is the genius. And what Jack Mallers has built is extraordinary. And I'm very happy, full disclosure, that we own a piece of that company, and hopefully we'll own more. And the adoption of this payment system is not going to go down. Okay, just full stop. Now, it's not going to be the only one, and there will be other things, but you just think about when Visa started, right? It was a little paper card in Stockton, California, of all places, because Bank of America out there had basically all the merchants in that area. And they said, hey, let's sign you up for this payment system and let's try it. And I mean, I remember my mom and dad getting the first plastic card, right, back in the 70s. And it wasn't like this, thing that you just forget about. It was a big deal. Right? It was a really big deal. And they tried it. And, now look, that worked. I don't have to carry my wallet around. I don't have to. And those payment systems are really interesting in the sense that Visa doesn't actually transfer money. I mean, they facilitate transactions, but they don't take my money out of my bank account every time. What do? Once a month, I settle up.
Right.
And they just keep a big spreadsheet. This is a little different than that, but it's simply a rail on which payments can occur. And this goes back to the whole conversation we've had about protocol layers. The internet is pretty clear. We got TCP at the base layer, TCP/IP at the base layer. We got FTP for files. We got SMTP for emails. We got HTTP for websites. And we got www that ties it all together. And we know that right now you and I are doing voice over IP and image over IP, but it's going across TCP/IP rails. But you can't own TCP/IP.
Yeah.
We built out these Bitcoin rails, this Bitcoin blockchain, this incredibly secure network, this incredibly global network. Not fast, but incredibly global and nearly instantaneous. And so now I can send you money, and I don't have to send you Bitcoin because I don't want to sell my Bitcoin either, but I can send you money over that network. And it's extraordinary. And so this chart is truly awesome because as the number of Lightning nodes increases, as the number of users, as people have that aha moment, the demand for, or the back and forth demand for Bitcoin will rise. Now, the one thing that's a little, I won't say, it's not that it's misleading, but is no Bitcoin actually changes hands. Now, you can have it change hands, but it doesn't have to change hands. Right? Simultaneous purchase and sale. So you're just using the network. So for me, what's really necessary for, all the price go up people is more adoption, more ownership, more conversion of fiat into Bitcoin. This is just a way to use Bitcoin to facilitate a payments network that doesn't cost us 3 to 6% or more if it's remittances.
Yeah, right. Yeah, I think it's just like I personally felt the need to include this chart this week because I think I've just been wrong about Lightning in the past. And basically anytime Lynn Alden says, hey, you should actually look into this, I hate being on the other side of anything that Lynn Alden is arguing. And the other, the point that she made, which also really made me think is just that, there's a lot of international payments use cases to consider. It's not just like, hey, can I pay for my coffee in Bitcoin? But there is, it's this age-old, argument within crypto. But like the remittances market, right? Like people using this as a global payments network. I just think it's really interesting. It's something to pay attention to.
Well, it's already happening.
And
look, if you can disrupt 162-year-old monopoly, Western Union, and the Bank of International Settlements, which is even older, it's a good thing, right?
Yep.
Because monopolies of anything, whether it's monopoly of money creation, monopoly of payment systems, monopoly of custody, monopolies are bad. They're evil. Mm-hmm. And they abuse their power and they make things more expensive than they should be. And the idea that, we've talked about this, right? If I had a mother-in-law in El Salvador, which I don't, I have a mother-in-law in Tulsa, Oklahoma. But if I had a mother-in-law in El Salvador and I wanted to send her money, she'd get 50 cents on the dollar. That's insane.
Yeah.
If I sent her a Lightning payment using Strike, she'd get $1. Well, peso. I mean, it would turn $1 into a peso. But, which that's pretty cool too. I mean,
that's pretty cool too.
It is pretty cool. I mean, it's amazing actually to take that green piece of paper and turn it into a red piece of paper using a gold coin, although there's no gold and no coins in Bitcoin.
Howdy, everyone. This episode is brought to you by Coinbase Prime, the leading prime brokerage solution for all things digital assets, providing secure custody, trading, and financing to an institutional suite of clients. On the retail side of things, I am more than happy to make this endorsement because I have been a customer of Coinbase since the day that I got into crypto. I still keep the vast majority of my assets there, actually, and I do it for one reason and one reason alone, so that I can sleep easy at night knowing that my funds are safe. It's the same reason when family or friends ask me, where should I buy my first Bitcoin? I direct them to Coinbase. And now, finally, when institutions are starting to ask, what's the most safe infrastructure to use? I only point them in one direction, to Coinbase Prime. And the reason that I do that is because it is peace of mind. When it comes to security, everything is top of the line on this platform, and it's a white glove experience to boot. They've been securing client assets at scale for 8 years, which as of Q2 of this year is $180 billion. They have an industry-leading insurance policy, and they're audited by blue chip auditors so that you can sleep easy at night too. So, stop listening to me, click the link at the bottom of this episode, and go check them out for yourself. And when you get there, tell them that I sent you because I love to get credit. When it comes to crypto, security and custody is paramount. Introducing this episode's sponsor, Ledger, your secure gateway to buy, exchange, and grow your crypto assets. I know I've got a smart audience, so I'm assuming/hoping that most of you already have your Ledger hardware wallet, but just in case you don't, this is how I think about it. I wouldn't get into a car if I couldn't wear a seatbelt, and I don't operate in crypto unless I can do it from my Ledger hardware wallet. Crypto is really exciting, but it is still the Wild West. There are lots of risks, and Ledger is the easiest way to make sure that you are still protected. And the best part about Ledger is that you don't need to make any trade-offs between security of your funds and utility of your assets because Ledger has Ledger Live, which is a software. It syncs right up to your Ledger hardware wallet, and you can do anything that you'd want to do with your crypto assets. You can easily send and receive, you can buy and exchange, and you can get access to staking. And they've actually started to aggregate some of the best DeFi apps and services out there. Two of my favorites, Paraswap, a decentralized aggregator, and they've got Lido for staking. And stay tuned, I'm going to keep you guys updated. They've got some really cool services coming out soon. Aave, Compound, and 1inch among them. So if you take one thing away from this, guys, please, please, please make sure that you're protected in this space. Get yourself a Ledger hardware wallet today and start using the Ledger Live app. Click the link at the bottom of this episode. Thank me later. You know, I've been talking to my dad now for Bitcoin about 4 years, and one of the experiences that he had that made him finally look at this more seriously was my sister, was doing a semester abroad in Switzerland, and the pain of trying to send her money over there was, and I was explaining to him, I was like, I know you won't use this, but the technology exists, to completely bypass the problem that you're having right now. So, so there's this whole thing that's going on right now. I want to see, I'm going to stretch the limits of my technology here now. I'm not going to be able to click on the link, but everyone should go check out, Jim Bianco basically did a whole great thread on this, which is basically this great wave of employees leaving their jobs. That's happening right now. So on the left here, you're looking at a chart of voluntary job separations, which is initiated by the employee. We're looking at essentially an all-time high, right, which is just over 4.2 million people left their job in the month of September. And then you're looking at on the right U.S. quit rates, which is seasonally adjusted, which is like just about 3% of the overall workforce quit and left their job. Jim also, these are all just charts from Jim's thread. Especially within accommodation and food services, there was a huge jump in terms of quits and people leaving. And, my kind of take on this is people are leaving their jobs in basically every sector in the U.S., but it is kind of happening in these low-paid, kind of service industry type jobs. And one of the things that Jim pointed out, there was a survey that was done, and the two of the largest reasons why people are leaving is they don't feel fulfilled or emotionally supported, which is basically just Chinese for I hate my boss, right? And I'm quitting. This is bullshit. And then also there was for flexibility, right? Because their current jobs wouldn't allow people to be flexible, and I feel like that actually is probably a pandemic thing. I have a couple thoughts on this. It's something that I've kind of just noticed firsthand experience. I think there is a lot of turnover that's going on. I've talked to my old boss, my last company, who's now the CEO, and he's just remained a good friend. And yeah, he's something that he's noticed as well. I don't know. What's your take on everything that's happening right now in the labor market, Mark?
Again, not to go too far down this rat hole, not even a rabbit hole, but the rat hole. It's all part of the plan, right? This is the plan, right? The plan of a dictatorship is to make the masses dependent on you. Okay? So the way you do that is you create economic duress, and then you shower them with free money. Okay? So you buy their votes first so you can get elected and secure, and then you basically create dependency. And that dependency is this whole ridiculous concept of universal basic income and handing people money to do no work, to be not productive members of society, to basically sit. It's like, the extreme of it is WALL-E, right? The movie WALL-E, where those people are on that ship waiting to come back to Earth, and they sit there and drink big gulps and watch, advertisements. And consumption of stuff is encouraged, and productivity is discouraged. I mean, think about what we're doing on the tax side. Right? We're super taxing CEOs of businesses in California. Are you joking? It's the nexus of innovation and wealth creation, and we want to tax those CEOs. We want to disincent the creation of wealth and jobs. And look, food service jobs are hard. I mean, I don't know if anyone's ever been a waiter, but it's hard work.
I have.
And it's maybe not fulfilling, but it does put food on the table and pay the bills, and it's necessary. And there's nothing actually better if you're going out to dinner than a really good server. I mean, it just makes the whole experience so good. And a bad one can really ruin the whole experience. And like, wait a second, why? If you don't want to be here, don't. I mean, you can't quit. The problem is, if you can't quit, right? If you actually need money to live, then you find a way to make it fulfilling, right? You find a way to be good at your job, and you can actually. The thing I think it's interesting about service businesses is your income is dependent on your attitude and your aptitude, right? If you're good at your job and you make the experience pleasant, and I think many others will tip more generously. Whereas if you don't, you could lower your income. But if you are now paid an equivalent, or even in some cases more, to stay home. Now, but you had the chart maybe last week or 2 weeks ago that showed that those benefits are starting to be cut off, but they're not being cut off everywhere. And it's the age-old question of the extended unemployment benefits. Should we keep them or should we not? Well, history tells us that if you keep them, you create dependency and less productivity. If you cut them off, interestingly, people will get retrained and go back to work. Not all of them, but many, just out of necessity. So I'm a big believer in free and open markets. I don't like the price fixing in the interest rate market. I don't like price fixing in minimum wages. I think you should let wages set themselves based on supply and demand. And I don't think we should be paying people to quit their job, personally.
Yeah. I would also say, as someone who's worked many service industry jobs, so I've worked at, my first job ever was at Tim Hortons. I've worked at Tim Hortons. I've worked at McDonald's. I've also done all, but I was a lifeguard. I was a waiter for a number of summers. Big difference in between being a waiter and an employee at McDonald's, let me tell you. So, I think, when I think of this, when I look at this chart, this is what this makes me kind of think of, which is, this idea of shipping all of our jobs off to China, right? And kind of the Trump argument of, hey, we want to bring those jobs back to the U.S. And what this chart tells me is, you know what? When an economy and a country gets developed enough, there's just certain jobs that people don't really want, right? And it's kind of this intractable problem of do we want to bring back jobs over that people don't want? Like, I'm very much my framework is starting to be, look, globalization in a lot of ways, it was good for the US. In a lot of ways, we lost out. And honestly, if, scoreboard, right, between US and China over the course of the last 30 years, China has lifted like 800 million people out of poverty. Arguably, they have benefited much more than the US has from outsourcing, some of these, like a lot of our labor pool essentially to China. But, I look at this chart and I'm like, yeah, but I feel like even if we brought back a lot of those jobs that we outsource, people wouldn't even want them here anymore.
Oh,
anyway.
Of course not. No, absolutely.
It's a tough
I'll give you a perfect example of that. Perfect example. So, was traveling to China a number of years ago. We have an office in Shanghai, and went over there. And at the end of the long day, our partner there said, "All right, hey, let's go get a foot massage." So we go in there, and it's
as one does,
right? And we go in, and you sit in these big chairs, like big barber chair, and there were three of us. And these three nice young girls come in, and so for $10 US, you get an hour, 60-minute foot massage, a bowl of noodles, and a beer. Mm-hmm. Okay, pretty good deal, right? And so we're there, and so I want to get to know these people. So I asked, and I don't speak any Mandarin, so my partner said, "So where are you guys from?" And they're like, "Oh, we're from the rural provinces." "Oh, so you moved into the city to get this job?" And I'm like, "Yeah." So, "Well, where do you live?" I'm like, "Oh, well, they have a barracks for us." I'm like, "Oh, that's so great." The employer, "Well, we have to pay for it." And "What do you mean?" I said, "Well, $10. We get 4, and we have to pay 2 for the training and the barracks. So basically, they make 2, and the boss makes 8." And I started thinking about it, and I'm like, okay. I said, "Well, what do you want to do?" He said, "Oh, we're saving all our money so we can open our own shops." And I'm like, okay, what American teenager would want to do that job? Okay, that was first. Second, what American teenager would save the money instead of buying the latest iPhone or video game? But the work ethic of these young women was incredible. And they were thinking entrepreneurially. Mm-hmm. And to your point, that's what's kicking our ass, right? It's an attitudinal thing that I work hard, I save my money, I invest it, and I make a better life. That was pretty cool.
Yeah, I agree with you. As a younger millennial, I have a lot of thoughts on this. I do think it's interesting that you say it's a tough time to be a millennial. I think in some ways it's challenging, but I also do think we have a lot of opportunity, and my generation doesn't. And look, this is just an observed trend in history as well. When nations are doing really well, it does lead to complacency. And one thing that I will say, an experience that I've had that I would share is, there's a lot of controversy around kind of within steel in general. And there's this whole kind of thing with China versus the US and steel. And, China's been flooding the market with overcapacity in steel for a long period of time. People get all up in this was a talking point, actually, when Trump was getting elected, actually. We've been putting tariffs on Chinese steel for forever. It basically doesn't do anything. But I will say, I worked as a consultant. Our niche, like the least sexy niche on the face of the planet, we helped large companies purchase steel. And there were basically 3 different regions that we helped source from: the US, Europe, and China. And I will say Europe was like the worst. You call up and be like, "Hey, I want to spend $30 million with you." They'd be like, "Everyone's on vacation 4 to 6 weeks." You'd be like, "Oh my God, like, please take my money." Yeah. The US was, you call up, they might respond to you, but past 3 p.m., nobody's responding. Nobody. Absolutely not. And it, weeks to get back quotes. China, if you called them a Chinese mill at 10 p.m. at night their time, they would get back with a quote by 8 a.m. the next morning. So it's kind of like, I get it.
Yeah, look, to your point about millennials and Gen Zs having opportunity, it's the greatest opportunity in the history of the world, right? And look, I'm prone to hyperbole, but this is real, and it's because of this exponential growth wave that we're about to go on. And look, what you guys are building at Blockworks is a perfect example of this, right? You guys took risk, you started a business, you worked hard, you got creative, you are building a really cool business that provides great content and service and community, and that's a huge opportunity. But you actually have to work. You actually have to do it. And it's not easy, and it's frustrating, and there have been ups and downs along the way, mostly ups, less downs, but because you guys are kicking ass. But it is so much opportunity, but there's this malaise of so many, like, oh, the jobs are offshoring, and there's all this problem with COVID. I'm like, it just depends on your perspective.
It does.
Every problem
I totally agree.
is an opportunity, right? Every roadblock may send you in a better direction. Every door that's closed, God opens another one, and the whole thing. Look, my life's been a winding, series of happy accidents. Someone said, no, it's divine intervention. I'm like, either way, I didn't plan to be here. I didn't plan to be a venture capitalist in digital assets. That wasn't my plan.
That wasn't the plan?
I didn't wake up one morning when I was 16 and say, geez, I really want to be involved in digital assets. But this is the biggest opportunity, wealth creation opportunity I will see in my lifetime. And I'm going to be here a long time. I got the 10-year-old. I got to be around and work and tokenize the world, right? I saw a clip of myself from 2018. And Maria Bartiromo said, you're starting this new business, Morgan Creek Digital, and what are you going to do? And I said, well, I'm going to spend the next 2 decades tokenizing the world. Yeah, sounds actually pretty good. I like it.
I think it's a good line. It is funny. I don't have as much experience to draw back on, but I do love the idea of one thing I love about a podcast is you can go back and see what you were thinking very honestly in different periods of time, and it's cool. I like to change my mind, so it's useful for me. I want to get your take on this story. So Bloomberg just came out with we got to talk about the Bitcoin futures-based ETF. All right, so
yes.
Bloomberg just came out with this story. It's hitting me with a subscription thing, whatever. But basically, it's looking like there have been a lot of different applications, right? A whole bunch of different companies. Valkyrie, I think ARK just updated theirs. Basically, Bitwise, a whole bunch of these companies have filed for a Bitcoin ETF. The SEC tweeted something out, which is something to the effect of, hey, if you're going to invest in a futures-based Bitcoin product, like just be careful, yada yada. It looks like, knock on wood, we've had the rug pulled on us before if you've been operating in crypto, but it looks like this is going to get approved. I guess the caveat is saying what we talked about, I think last time or maybe 2 weeks ago, which is that a futures-based product is not ideal. There's something called roll costs, right? Which is that when the futures, you're essentially continuing to roll the futures. There's a cost for doing that. That eats away at your potential profits, right? So it's not as good as spot exposure. But what's your take on everything that's happening right now around the futures-based Bitcoin ETF?
Look, I'll go on the record. It's definitely going to happen, right? I mean, they just telegraphed it, and so it's definitely going to happen. I think that's good. Again, we are investors in Bitwise, and I was actually with Hunter last week in California chatting about different stuff. They don't have any news, but it's definitely going to happen. And I don't know which one, but look, paper is inferior to physical for all the reasons that you mentioned, but it's still better than nothing. And
I agree.
And it's certainly going to increase adoption. There are people who for whatever reason don't want to own the Cayman Trust structure of GBTC. When it had a big premium, I understood that, but when it trades at a little bit of a discount, I don't know why you wouldn't want to own that. And with the ETF approval, that gap will probably close. So there's kind of an arbitrage to do. But people just are comfortable with ETFs. You look at the amount of money that's going into ETFs; it's extraordinary. So I think that's a good thing. The problem I always have with paper, with futures, is the imbalance between the physical commodity and the paper markets. And you can see it every spike in commodity prices where there is futures, whether it's gold, whether it's oil, whether it's nat gas. What you'll see is an increasing amount of money that flows into the paper. And if you go back to 2014, oil prices spiked to like 142 or whatever, and then they crashed. Well, why'd they crash? Well, at the peak, there were 4 paper barrels of oil for every real barrel of oil. Now, a paper barrel of oil is not a real barrel of oil. It's just an agreement between people to, exchange fiat. And like in the bad old day, or I should say the good old days, if I wanted to sell you a barrel of oil, I actually had to have access to a barrel of oil to deliver to you. Now, you didn't actually have to take delivery. We could settle up before the delivery, and then I don't have to send it to you. But I actually had to physically have a barrel that I could send you. Now I can just make up an imaginary barrel in the futures market, and that distorts supply and demand data. It distorts how much capital is really flowing into the market. And so I think that if you're buying a futures product, you actually aren't increasing the amount of money in the network. Just like on Lightning, right? Using Lightning doesn't actually increase the amount of money flowing into Bitcoin, unless you use Lightning to buy or sell Bitcoin. Like this getting paid in Bitcoin, that does, right? If you're converting fiat into Bitcoin over Lightning, that's fine. That actually is positive. But if I'm turning fiat to fiat over the Bitcoin network, that's not increasing the base, which is what we need for the network value to go up. And so I think there'll be probably a buy the rumor, sell the news.
Yeah.
Look, Bitcoin is super overbought. It's only been this overbought in a very small handful of circumstances. The last time we were this overbought in September, which is not that long ago, we had a 23% drop in about 10 days. And I'm not saying that's going to happen, but if you look at periods of overbought and oversold, they don't plateau, right? They don't go down and plateau. They don't go up and plateau. They spike. So you go from overbought usually pretty quickly to oversold. Same thing with when you're oversold at an extreme, you go to overbought. So the 60 is a really important number, and we're just on the cusp. We talked, I think it was last week, about the cup and handle. This is one of the best cup and handle patterns I've seen in a long time. We had a really nice, deep base, declining volume, loss of interest, people kind of giving up. And then we had the sharp spike in August, the correction in September, and now you coined the term, Uptober. So
I gotta say, I can't claim credit for that, Mark.
Oh, okay.
Do you know who Crypto Cobain is?
Oh yeah.
Do you know who that is? He had this tweet. We can link to it in the show notes. He tweeted back in January. This was when Bitcoin mania was like full on, right? It had just run from like 10 to 30 or something. Everyone was like, it's going right straight to 100.
Yep.
And he tweeted this thing out back then. He was like, I fully believe we need to have a full blow off top and trade sideways until October before we get to 100.
Wow.
I'm sure he was taking a shot in the dark, but it's like I'll send you the tweet after. It's like an unbelievable call your shot.
Well, there's
looking pretty accurate.
There is a seasonality to this asset, and so maybe he was looking at that, but it's a great call. And look, Uptober has been intense. I mean, we're up, I think 45% in 4 weeks. So, but I think we're overbought. I think people need to be a little bit careful. And look, I say this all the time. You should never buy everything at once, right? You should be accumulating ownership of the network. The daily price does not matter. Price is a liar. What matters is ownership of the most valuable network in the history of mankind. If you don't own a piece of the most valuable network in the history of mankind, why? Tell me why. I don't understand. I don't understand how anyone could not want to own a fraction of this network. It makes no sense to me. And then we can get to the whole issue of money and what's happening to our fiat and how it is being destroyed at an accelerating pace. And you can see that in the nominal price of all assets, from real estate to, collectibles. I mean, the craziness. Look, I'm a huge fan of NFTs. Tokens are going to change everything. I mean, everything. But what's happening in certain NFTs is just money illusion. People have zero basis ETH, and they're paying prices for things that are illogical because they don't value the money correctly. I think personally.
I completely agree. So I have this whole theory. So the next bit of news that I wanted to talk to you about was exchanges launching, like Coinbase and FTX both launching
We are
NFT exchanges.
We are on a mental. Yeah, that's good.
Similar wavelengths here. So here's my thought on this. Long term, extremely bullish for NFTs. I'm agree with you. I am long term. I think NFTs might actually end up being more consequential than things like DeFi, et cetera. It's a really unique ownership structure. That being said, I have noticed I think people get this wrong, and you as a VC, I'd be curious to get your opinion. But people say, "Oh, all this VC money coming in, that's bullish." Long-term bullish, completely agree with you.
Yep.
Short-term, I will say VC money and funding tends to come at market tops, and I think the equivalent is kind of what we're seeing in NFTs right now. So Coinbase launched an NFT marketplace. FTX launched the day before. I'm sure that wasn't an accident. Those guys are on top of it.
Yep.
Already, Brian Armstrong tweeted one day after. So they launched on Wednesday, or they announced that they were planning on Wednesday. They had 1 million people signed up by Thursday. I think that's up to 1.7 million already at the time of recording, which is Friday morning. But my take on this long-term, extremely bullish. Most people still access crypto through Coinbase. They're an advertiser on this show. I keep most of my assets on Coinbase. I trust them. I think they're a great team. I will say, and I think what they're going to do is they're going to broaden the base of people that use NFTs hugely. I will say the timing on this to me feels like I think it's calling a market top in NFT. I'm not a markets guy. I don't look at charts, but I will say I feel like this is a momentary top for NFTs. It's just my personal opinion on the whole thing. What do you think about this whole thing?
I think your instincts are right on, but I'll modify it subtly in the sense that it's absolutely a momentary top for the most popular and highly demanded. Because things that are popular fade because something else comes up that becomes equally or more popular. Here's the thing. There are 68, maybe even 69 now, because it changed. It's like the debt clock. It just keeps going. 68 million people use Coinbase, are customers of Coinbase. The two of us, most of the people at my firm, again, we were are owners. We invest in the private markets. We still own 80% of our shares, which we probably will sell at some point. Not probably, we will sell because we're venture capitalists. So we need to return capital to our investors. And that's not because we don't like the company and don't think it has a great future. It's just the job of venture capitalists to take private companies, turn them public, and send the money back. So the fact that they're getting into it is important. One of the reasons we're leading the Gemini deal is because of their NFT platform, Nifty Gateway, which is one of the top NFT platforms. And
those guys went to Emory. I will say, shout out Emory.
There you go.
Yeah, Duncan Cock-Foster. Yeah, the two founders.
And
they got acquired by Gemini pretty early, but
it's a great business. And NFT tokens, I think will change from NFTs because non-fungible will be just a word we don't need to talk about. But tokens are going to be at the core of the blockchain, or what I call the trust net. Right, the trust net is going to be monstrous. And what websites did to create the internet, making information bidirectional, tokens make value bidirectional and assure property rights. And there will be hundreds of billions of tokens. Everything in the world, right? The piece of art behind me, everything will be tokenized and will trade on these marketplaces. And there's going to be an explosion of marketplaces, just like there's going to be an explosion of exchanges. I think there are 400 crypto exchanges right now, give or take. They'll probably get to 1,000, and then they'll go to some smaller number. Just like the bank, we went to thousands and thousands of banks, and then you consolidate. And so in the beginning stages, there has to be an explosion as more and more people adopt and you get distributed network effect. Then you get consolidation, hopefully not down to a monopoly or duopoly, but to a oligopoly-ish. The 4 big U.S. banks and a couple in Europe and a couple in Japan. And the few, if you get to too few, then the customer loses all the purchasing power, the pricing power, and people abuse their power. But that's a long way of saying the caveat is I think there is a peak in certain NFTs, but broadly, NFTs are going to continue. And look, I was scrolling through OpenSea last night. So I'm involved in something called League DAO, which is essentially creating a decentralized version of fantasy sports. And these guys are amazing. I mean, the developer team and the visionaries of this are amazing. I'm just along for the ride because, it's what I do. I try to find smart people and back them. But so I went last night and I minted my teams for the new league. And
Love this.
And it was awesome. And it was crazy because there was so much demand. Gas fees went crazy and I had to wait and kind of time it. And I tried doing volume to get I still pay too much in gas fees, but whatever. But I got my teams. And so then I was on OpenSea kind of seeing who I got because it's a random generation of the teams. You don't get to draft, which I don't know how I feel about that, but cool. So I have my teams. And I'm going through OpenSea and I'm looking and I was like, there's some cool stuff, but there's a whole bunch of not cool stuff and just a whole bunch of stuff that it was like literally going to a garage sale. And there were a couple treasures and then a whole bunch of stuff that the person doesn't want for a reason. And there were some clever ideas and there were some, historically, I shouldn't even talk about it, but the one that was like laughing was the stripper NFTs. Like, really? We're going there? And they work in strip clubs. I'm like, no, just stop. But it's the oldest profession. I mean, that's been around forever. But it's just I don't need that right now. But there were a couple other things on there that I thought were really compelling. But there were some, I don't know, when something is visually attractive and a lot of people want it, I think that's great. When something's really ugly and people just want it because other people want it, I don't know. I don't know that that's durable. But it is to a point. I mean, there's no accounting for taste, right? There's no accounting for taste. Art is interesting. I mean, there are people that look at that thing behind me and say, that's the ugliest thing I've ever seen. I really like it because it's about, the original Fighting Irish, the Irish immigrants that came to this country and built much of the country. And then there's this little school named after him. But anyway.
I have just a couple, I guess, thoughts here, and I know we got to wrap up soon. The original commentary, huge fan of Coinbase. I think this is super bullish for their business. I think it shows a lot of foresight. So bullish. Oh my God. This is more of a commentary on NFTs than Coinbase in general. But I'm in complete agreement with you about NFTs in general. I do think it's worth watching. Yeah, just because the supply of new NFTs that are issued is just nuts to me. I do think that some collections like CryptoPunks and Bored Ape Yacht Club, I think those have cemented as being those have cemented in the mind share. Yeah. And I'll be honest, like I don't own NFTs. I'm doing my stuck in the middle of the IQ bell curve thing. I'm waiting for a dip, and if I bought NFTs, it'd be one of those because even though as expensive as they are, I'm pretty sure at this point that they're not going to go away, and I think they're going to continue to get more and more valuable. The last kind of thesis that I have, and this is going to sound weird, but like, okay, so the strip club thing, whatever. I'm starting to see ideas crop up. This tends to happen in this cycle where like, okay, these ideas that are going on in crypto are cool. How can we connect them to real world use cases? Right. Eventually we will get there. I have this weird theory though that I when I see that, I'm like, nah, not going to work. And my analogy would be, if you thought about the internet back in the day, it's like Vonage, right? Like the interesting things that are happening right now are use cases that were never possible pre-crypto. And eventually all this stuff is going to evolve and interact with the legacy economy, et cetera. And it's going to solve real world problems. But in the internet, it took a long time before that actually happened. And if you were just waiting for like, okay, if you were asking the question in 1995, how is the internet going to help me solve business problems today? You would have been waiting for a long ass time, and you would have lost out on a whole bunch of really interesting, cool things. We had Anatoly, founder of Solana, on Jason's podcast the other day, and he was saying how internet, businesses that provide services to other internet companies, that was seen as like, this is like a Ponzi circular system here, where you're not solving any real world problems, and like, look at how successful those businesses are. So
infrastructure, baby, all about infrastructure,
right?
You got to build it. You got to build it.
So my thought on the NFTs, where it's like, this NFT will get you access to this real world thing. I'm like, nah, just get me some cool art. Get like any art that wins people's mind share. That is interesting, I think.
Yeah. Well, and the thing I liked about the announcement on Coinbase was it talked about the community. Yeah. It's the community that builds the value, right? Mm-hmm. Supply. It's basically supply and demand, right? If you have the best piece of art in the world and no one sees it, right, then it's not really valuable. Or if you're the best lemonade in the world, but no one drives by your corner, you're not going to make any money. So community is what matters, and therefore the more ubiquitous the brand of marketplace, the better. It's like eBay, right? When eBay started, I remember my board at Notre Dame saying, "You want to invest in a garage sale company? Are you an idiot?" And look, that single investment turned Benchmark Capital One into a 96x venture capital fund, one of the best venture capital funds of all time. $85 million fund generated more than $8 billion of value, because it turns out that there's more to do on eBay than simply a garage sale. Mm-hmm. And who would have thunk it, right? But people who were building the infrastructure to allow for selling real goods and services, to, having the fulfillment, right? The problem with any new idea is if you try it and you have a bad experience, you're lost. Mm-hmm. Whereas if you try it and you have a good experience, one of the challenges for crypto right now is the UX still sucks. In most cases, the UX still sucks. Coinbase is actually pretty good. Gemini is pretty good. A couple of the other exchanges are pretty good, but those are CeFi. But to actually hold your own keys, unless you're a digital native, it's a pretty bad. Now, I think Ledger is fixing that, and we're invested in that. And so I like to own the companies that are building out the infrastructure to solve the problems, to make tech invisible. When tech works and it's invisible, like right now, TCP/IP, we're using it, voice over IP, but value over IP is bigger, way bigger.
I haven't fully developed my thoughts on this, but I don't know, Mark, like how deep you've gotten into like the whole DeFi thing. Like I'm not that deep, but I will say I had my friend, like a couple months ago, I had him walk me through like, okay, how do I use like the AVAX bridge, right? And like, how do I move assets from like the ETH ecosystem into the Avalanche ecosystem, et cetera. And it's like more than a UX thing. It's more than this is like a cumbersome UX. It's more like I felt like I was almost not like playing a video game, but like I'm like going from this step to that step to that step, and I'm like, oh, cool, I like figured it out. And there's something like almost community building about it. I don't know, but it's definitely...
Look, that's such a great insight. And look, I'm not as deep as I should be. I mean, we, as many people know, my original two partners in the venture fund were and are maxis, and they've modified now. They're more tech maxis, but they were Bitcoin maxis, and so you can't do everything, but we didn't. Mm-hmm. We probably didn't do enough in DeFi, and there are groups like Parify and others that just crushed it out of the park. But I'm a user of DeFi, right? I mean, I use a lot of the DeFi protocols, and I am absolutely, in our new fund, going to own lots of DeFi. I'm going to own lots of play to earn. I'm going to own lots of metaverse. We're going to take advantage of... Look, if you think about the growth of anything, it starts small with a kernel and a seed, and then it starts to grow, and the surface area gets bigger, and it touches more things, and the surface area gets bigger. And that exponential growth is the key to everything here, right? Mm-hmm. Linear growth, it's fine, it's good. Mm-hmm. And that's how the world used to work. We worked on hierarchy, we worked on linear, and there was a relationship between supply and demand and profits. exponential growth and network effects changes everything. And the network effect of all being connected in a community through the internet and the mobile net, the fact that we all carry this around all the time, right? And the fact that everyone can get access to everything immediately and instantaneously, and now we're going to be able to do that with things of value. Yeah, we could talk all day about it, but we got to wrap.
I know, we got to wrap. All right, Mark, this has been a ton of fun. I almost want to benchmark some questions because I have 3 questions. I want to make sure we get to them next week. But whatever, we'll get to it when we get to it. This was a really fun one. Thanks so much for doing this. I'll see you same time next week.
Sounds good. Thanks, Michael.
Cheers.